And I think that by 2030, the BRICS world will cover many of the countries producing the principal base metals, and they won't be selling their output for dollars. And I think producing a commodity-backed currency gets too complex. I think it will end up by being a gold-backed currency, not necessarily convertible, maybe convertible within the BRICS community, but not externally.
Simon Hunt, the author behind the Frontline China Report Service, available through the TIS Group, has raised several intriguing points about the potential evolution of global currencies. Hunt suggests that while the idea of a new currency within BRICS is interesting, its wider acceptance could be challenging, and a commodity-backed option like gold might be a simpler alternative. The idea of a new international reserve currency was initially brought forth by Russian President Vladimir Putin during the 2022 BRICS Summit. This proposal aims to establish a gold-backed currency as an alternative to the prevailing global standard, the US dollar. However, an interview with Lyn Alden, featured in Cointelegraph, offers insights into the potential hurdles facing the realization of a widely adopted gold-backed currency within the BRICS countries, which encompass Brazil, Russia, India, China, and South Africa. Hunt further speculates that by 2030, many nations could seek alternatives to the US dollar for international transactions, potentially creating innovative payment methods that do not rely on the dollar. This sentiment is not limited to China. Brazilian President Lula's visit to Beijing in April signaled a desire for reduced dependency on the US dollar in global trade, exemplified by the increased trade volume between Brazil and China. These global currency shifts and potential alternatives to the US dollar could have a significant impact on gold prices due to its role as a traditional safe haven asset in times of uncertainty. Just before you watch the Simon Hunt's interview and learn more about market trends, consider subscribing to our channel and give this video a big thumbs up. Interestingly, Hunt highlights that while the BRICS countries explore new currency avenues, many powerful nations within the G7 remain committed to their respective fiat currencies, unbacked by physical assets. The G7 comprises the world's key economies and features some of the most traded and liquid currencies on the foreign exchange market.
I think the focus is going to be more on de-dollarization, that is, developing more payment mechanisms between countries that exclude the dollar. And I think it's going to take some years before they can actually fix a single currency. We've already seen it start. UAE, India, for instance, big trade deal, excluded the dollar. You've got countries selling oil not for dollars. You have the IMF agreeing with Argentina to accept renminbi for repayment of interest and debt. What does that mean? It means that effectively the IMF has accepted renminbi as a currency. So other countries don't have to build up reserves of dollars. Instead, they just have to sell more commodities and other goods to China. China's trade policy is pretty clear. Trade with Europe and America is falling sharply. Trade with BRICS and BRI countries is rising sharply. That trend will continue. I think the statement that she made to Gulf countries end of last year was very informative. Effectively, he said, you will have surpluses with us for some years, and we will have surpluses with you in some years. How we resolve those surpluses will be through a third party. I think he said through an interstate mechanism. Is the word he used. I think G7 countries will continue to operate on a fiat currency basis. Most of the rest of the world ain't going down that road. That's why I think sometime in the mid-2020s, the risk of war spreading more globally than just confined to Ukraine and neighboring countries is a real risk, because It's the end of the American empire.
Hunt suggests a rising chance of a U.S. recession by year-end, possibly starting shallow but with deepening potential, prompting significant central banks like the G7's Federal Reserve to consider quantitative easing and interest rate cuts in response. Earlier in the year, concerns of an imminent recession were widespread, with a January survey conducted by the National Association for Business Economics revealing that only 42% of forecasters believed the U.S. could avoid a recession within the next year. However, a subsequent survey in early July showed a notable shift, with 71% of forecasters expressing confidence that a recession is unlikely in the upcoming year. Hunt also raises the prospect of a second wave of inflation, which historically tends to be more intense than the initial wave. He predicts a substantial increase in global inflation, potentially ranging between 13% and 15% by the conclusion of the following year. Despite annual inflation in June standing at 3%, which is an improvement from the previous year's 9% level, it still exceeds the Federal Reserve's preferred range. The chairman of the U.S. Federal Reserve has indicated the potential for further interest rate hikes in response to persistently high inflation. Let's get back to the interview.
We will see America in recession by the end of this year. I don't think it will be a deep recession. That comes later, because the Fed and other G7 central banks will be forced to revert back to QE and to drop interest rates, as the markets will also, by the autumn, will start having to reassign the probability of war over Ukraine, that it's not going to be a benign outcome. So, troubled period ahead. The hangover will be relieved by central banks going full blast on opening credit taps. Inflation is going to reappear. It's falling at the moment. That was all part of our forecasts, but it remains sticky, because if you look at between 2014 and 2021, that 7-year period, central banks and governments unleashed $200 trillion more than the value of GDP. Once inflation starts to tick up again, a lot of that money will have to find a home. So we will get the second wave of inflation, and second waves are always much more severe than the first waves. And we have global inflation next year, by the end of next year, running at between 13 and 15% global, exasperated by energy prices rising sharply because of supply disruptions, food prices soaring for weather and supply disruptions, weather because we will see either by the end of next year or early in 2025, the onset of the 89-year Glesberg cycle, which last created the Midwest Dust Bowl decade. So that's taking the world up to the end of next year.
As currency dynamics evolve and central banks respond to economic challenges, the role of gold as a hedge against uncertainty gains significance, underlining its enduring appeal in a changing financial landscape. How will gold's role as a safe haven asset continue to shape and respond to these evolving trends? Share your thoughts in the comment section. If you liked the video, don't forget to subscribe to our channel and tap the bell icon so you don't miss out on our upcoming content. Surprisingly, around 87% of our viewers haven't subscribed yet. We're aiming to reach 3,000 subscribers in the next 2 weeks, and your support could make a big difference. Thank you for being a part of our community.